Very good morning, everyone, and welcome to today's discussion on taxation of virtual digital assets. I am CA Gaurav, and I would be, discussing with you the recent amendment or the amendment brought in by the Finance Act 2022 to tax virtual digital assets. So basically, we have three points to understand. One is what is the meaning of virtual digital asset, or what is the scope of virtual digital asset? Second, what is the taxation? If you have virtual digital asset, so what is the specific law under the Income Tax Act which taxes or which creates charge, or which suggests the scheme how to tax income from virtual digital asset? Third is there is a responsibility casted on certain persons to deduct the TDS if there is a transfer of virtual digital assets. So we're going to discuss all these aspects in today's discussion, and a very warm welcome to my friends who have joined me on a Zoom, and the friends who have joined me live on our YouTube channel. So starting with the first aspect, that what is the scope or meaning of virtual digital asset? We all know that certain common virtual digital assets are your Bitcoin, your Ethereum, your Cardano, your Dogecoin, NFTs. So basically, these are all, I will say, assets, something intangible, which are generated using, blockchain technology. These are digital, correct? They represent some value. They have got some value. They can be traded. They can be exchanged. And broadly, we can divide this digital assets in two categories. One is the cryptocurrency, and second is the non-fungible tokens. Now, under the Income Tax Act, both cryptocurrency and both non-fungible tokens are considered as virtual digital assets. Rather, the definition or the scope is pretty wide. And we have recently seen, that the CBDT has come up with a notification which excludes certain assets from the definition of virtual digital assets. So recently we got a notification number 74 of 2022, which excludes gift card, vouchers, mileage points, reward points, loyalty cards, which can be used for discount purposes. Good morning, Manishji. I'm perfectly fine now. So you can use these gift cards, vouchers to obtain goods or services, mileage points or loyalty cards for discounts. So now all this stuff has been excluded from the definition of virtual digital assets. One more thing, as far as NFTs are concerned, we have a notification number 75 of 2022, which now specifically excludes those NFTs wherein the underlying asset is tangible asset and the transfer is legally enforceable. So just to give you brief, if you talk about NFT will have certainly some underlying asset. That underlying asset may be tangible asset, or that underlying asset may be intangible assets. It could be, let's say, the clipping of this live session which is going on, clipping of some movie song, some Bollywood dance sequence, some dialogue, some poster. And it could be also some tangible asset, let's say the jacket worn by Mr. Amitabh Bachchan in the movie Shahenshah, or the bat of Yuvraj, or the hat used by Mr. Dhoni. So it can be both tangible and intangible. So the notification 75 of 2022 excludes those NFTs wherein the underlying asset is some tangible asset. So if you are buying an NFT wherein the underlying asset is Dhoni's hat, and you later on transfers that NFT, now the gain which is arising from the transfer of NFT, being the underlying asset is Dhoni's hat. So what indeed you are transferring is the Dhoni's hat, and thus the notification 75 2022 excludes those non-fungible tokens from the scope of income, from the scope of 115 BBH, which is the section which lays down the scheme to tax virtual digital assets. Now, when I'm saying that 115 BBH, lays down a scheme to tax virtual digital assets, couple of things which we need to understand. So we all know that the 115 BBHH came into effect from 1st April 2022. So prior to that, whether there was a taxation or not, certainly if you have transferred virtual digital assets prior to 1st April 2022, then the taxation would take place as per the normal provision which were existing at that point in time. But after 1st April 2022, if there is any transfer, the transfer will take, the taxation of such transfer will take place as per 115 BBH. So 115 BBH is specifically applicable on transfers, and if there is any income other than transfer, then it is not covered under the scope of 115 BBH. Now, there could be a loss, notional loss to you, which is, let's say on 31st March 2022, because of the change in the valuation of, change in the value of the cryptocurrency. So what to do with that loss? So as in my opinion, see, currently there is no provision in the Income Tax Act which gives you the benefit to account for that loss or gain. So what will happen, now under 115 BBHH, which is the scheme of taxation of transfer. So what we need to do, we need to compute your, the income as per 115 BBHH if there is a transfer. So if you are transferring virtual digital asset, which may include cryptocurrency or an NFT, then we will take the sale value less cost of acquisition. So only these two items needs to be considered: your sale amount, your transfer, the consideration for the transfer of virtual digital asset, and your cost of acquisition. Anything else, any expenditure, it may be the common expenditure or it may be the notional loss, nothing would be allowed. Simply your transfer price, that is, the price at which you're transferring the virtual digital asset, less cost of acquisition will give you the income. And on that income, there could be again two scenarios: that income is positive and that income is negative. Means you have profit or you have loss. So if you have profit, you need to pay 30% tax on that transfer income, on that the income which is getting generated because of the transfer of virtual digital asset. And certainly it is not only 30%, it will also have the surcharge plus cess component depending upon the level of income. Now, if it is a loss, then that loss is indeed a dead loss. It would not be allowed to set up or carry forward against any other income. So it may happen that you entered into 10 transactions of transfer of VDA. We will not go into club transactions. We will see each transaction independently. And when we are seeing each transaction independently, we'll compute profit and gain, profit or gain of each transaction independently. Wherein you have profit, you will pay tax at the rate of 30% plus surcharge, it says. And where you have loss, you will just going to forget that loss in computing your income. That loss would not be considered. Also, any the loss which is arising because of transfer is not allowed to carry forward. So the loss, as I'm saying earlier, will going to become a dead loss. So So no common expenses, no other expenditure, so no loss, nothing is allowed except cost of acquisition of virtual digital asset. Now, this is the second aspect. First aspect, we discuss the scope. Second aspect, we discuss the taxation, which is pretty simple. So any laws which is there on 31st March 2022, national laws that you cannot take advantage, what you need to do, you need to consider your cost of acquisition for the purpose of computing the tax. Now, there is another provision which is 194S, which is on TDS. So as far as TDS is concerned, the rate of TDS is 1%, and the responsibility to deduct TDS is casted on the person responsible for paying to the transferor the amount of consideration. So now, in general, there is a, I will say, sort of rebate of 10,000. So if the consideration is below 10,000, then one is not required to deduct TDS at the rate of 1%. But in special circumstances, not special circumstances, whether in case of specified person, that limit of 10,000 is 50,000. And who are specified persons? Basically, individuals or HUFs who are not involved in business or profession, or if they are involved in business or profession, their gross receipt is less than 1 CR in case of business and 50 lakh in case of profession. So if you are individual or HUF, and you are not involved in business or profession, in such a case, the threshold of 10,000 goes up to 50,000. And if you are involved in business or profession, and if the turnover gross receipt is less than 1 CR, and if you are involved in profession and the gross receipt is less than 50 lakh, in such case, the threshold would be 50,000. Now, as I said, responsibility to deduct TDS is on the person responsible for paying. So broadly, we can put transactions in 3 categories. One is, let's say, there is a peer-to-peer transaction. You're directly transferring, the cryptocurrency from your wallet to my wallet. In such a case, the responsibility, let's say if I am paying you in through my bank account, then the responsibility is on me to deduct the TDS and deposit it with the government. If let's say in exchange of your VDA, instead of paying you in the fiat money, in the normal Indian currency, I'm paying you through VDA. So it is now both of us are actually transferring virtual digital assets. In such a case, the responsibility to deduct the TDS is on you and me both. So how we're going to do, as per the guidance note which has been issued by the CPTT, I will present you the challan that I have already deposited the TDS on this transaction. You will also present the same challan to me. You will deposit the TDS and you will present the same challan to me. So we're going to exchange those challans. Once those challans are exchanged, we will transfer the VDA. So let's say if there is some money is also involved, and there is some VDA is also involved, and again, till the amount, I would be able to deduct some portion of the TDS, and on the balance amount, I would ask for a challan from you. So before transferring the consideration to the transferor, the transferee must ensure that the TDS has been deposited with the government. There could also be scenario that the transaction is direct, transaction is peer-to-peer, but let's say I'm providing you services, and against those services you are transferring me virtual digital asset, you're transferring me the cryptocurrency. So what to do? I think that is a catch, that is a tough situation. So it is suggested that I must ensure, before providing you services, how you will give me the money, whether it is, how you will give me the consideration, whether it would going to be in the cryptocurrency or it would be in the fiat currency. If it would be the cryptocurrency, then because now I am giving you the consideration in form of services. So the responsibility is on me to ensure that TDS has been deposited. So either I need to deposit the TDS with the government by doing the grossing up, or I will ask you that you kindly give me the copy of tax challan that you have deposited the TDS with the government. So that needs to be done before, in my view, the services are ended. So during the continuation of service, I must ensure that the amount of consideration which you will transfer to me via Bitcoin, the portion of the same, 1% of the same has been deposited to the government. There could be second set of scenario wherein the transactions are happening through exchanges. So if transactions are happening through exchanges, the guidance provides that in such a case, the responsibility to deduct TDS would be on the exchanges. So exchanges needs to come up with some kind of a letter or a contract wherein they will assume the responsibility to deduct and deposit the TDS. So let's say I am buying, because I may not be knowing if I'm buying a cryptocurrency from the exchange. I may not be knowing that who is selling me, but it is a crypto exchange in between who is aware that who is seller and who is buyer. So now the responsibility of the transactions are happening through exchange. The responsibility is on the exchanges to deduct and deposit the TDS with the government. Let's say there could be a scenario wherein that we have a broker in between. If we have a broker in between, then there is going to be some arrangement or agreement between the broker and the exchange, and depending upon the the agreement between the broker and the exchange, the responsibility would be either on the exchange or the responsibility would be either on the broker. Now, the same thing may happen when I'm dealing with when I'm dealing on the exchange, that instead of paying consideration in form of the Indian currency, Indian rupee, I may be exchanging the virtual digital assets. In such a case, the guidance note says that again, it is the exchange needs to deduct 1% TDS, club all the transactions which happened during the day, and towards the end, that is at 00R, that the currency, that the cryptocurrency needs to be converted into the INR. And if there is non-primary currency, other than Bitcoin or Ethereum, or which is let's say a private cryptocurrency, in such a case, that private cryptocurrency should be first converted into primary cryptocurrency, and then at the end of the day, the 1% TDA should be converted into Indian currency. There is a statement which this exchanges needs to upload. Also, we being individuals needs to update. So those forms or exchanges are 26Q, 26QE, and 26QF. QF is applicable when there is a transaction on exchange. So that is the detail which exchanges needs to give. If there is a transaction between specified person, then detail should go into QE, and wherein there is a transaction for other than fiat currency, then it should be 26Q. So this was broadly on the cryptocurrency, and if any one of you has any question on taxation or TDS aspect of cryptocurrency, feel free to ask. Few things I would like to clarify, that we have section 194Q as well. So law clearly states, and the guidance note also says that wherein 194S is applicable, that is TDS on cryptocurrency is applicable, therein you will not deduct TDS under 194Q. Also, for an individual, it is not required to have TAN, tax deduction account number, while deducting TDS under 194S. So this was brief on section 194S. If you have any query on TDS or taxation of cryptocurrency, feel free to ask. If you have any question on taxation of cryptocurrency, so let me see whether there is any question on YouTube. So I think I'm done with the session. Many thanks to all of you for joining in this today small discussion, a small but important discussion on taxation of virtual digital assets. Thank you.